How small apartment investors can incorporate market trends into strategies. Develop a market-driven investment strategy. Define investment criteria. Base criteria on market data, such as targeting properties in areas with strong rent growth, low vacancy rates, or emerging employment hubs. Prioritize high-growth areas. Identify neighborhoods or submarkets with upward trends in rental demand and property appreciation. Align with tenant preferences. Invest in properties that meet current tenant demands, such as updated amenities, sustainable features, or proximity to transit. Adjust investment strategies based on market conditions. Rental pricing strategies. Use market data to adjust rental rates in line with demand, ensuring competitive pricing that maximizes occupancy and revenue. Acquisition criteria. Tighten or expand criteria for property acquisitions based on cap rates, price trends, and forecasted rental performance. Portfolio diversification. Consider diversifying into different markets or property types if local trends signal slowing growth or increasing risk. Incorporate long-term trends into planning. Anticipate demographic shifts. Analyze population and employment trends to identify markets poised for growth or decline over the long term. Plan for economic cycles. Build resilience by including strategies for downturns, such as focusing on affordable housing or stabilizing cash flow through refinancing. Sustainability and amenities integrate features that align with evolving preferences, such as energy-efficient appliances or co-working spaces to enhance tenant satisfaction and attract demand. Monitor market trends continuously. Review reports regularly. Use tools like CoStar, Yardi Matrix, or government economic data to stay informed about rental trends, cap rates, and property values. Engage with local networks. Attend local real estate meetings or subscribe to community bulletins for first-hand insights into neighborhood-level dynamics. Track comparable properties. Compare performance metrics, such as rental rates and occupancy, with similar properties in the area to maintain competitiveness. Developing an investment strategy based on market trends is crucial for success. For example, let's consider an investor who identifies a target market with several promising trends. First, there's strong rent growth, with rents increasing by 5% annually for the past 3 years, driven by job growth in the tech sector. Second, the market has a low vacancy rate of 3%, indicating strong tenant demand. Finally, the area is attracting young professionals due to its urban amenities and proximity to employment centers. The strategy here is an acquisition focus, specifically targeting Class B properties with value-add potential in the urban core. Investors should look for properties with below-market rents that can be repositioned to attract young professionals. When it comes to rental pricing strategy, align rents with market rates, offering competitive pricing while maintaining occupancy. Additionally, introduce premium rents for renovated units, such as those with modern kitchens or smart home features. Portfolio diversification is another key strategy. Expand holdings in similar high-growth markets with strong employment and population trends. It's essential to avoid oversaturated neighborhoods by analyzing new construction data to ensure continued demand. For long-term planning, monitor interest rate trends to determine refinancing opportunities. Include contingency plans for a potential slowdown by focusing on maintaining cash flow and reducing debt. To summarize, incorporating market trends into investment strategies enables small apartment investors to make informed decisions that maximize returns while mitigating risks. By continuously analyzing rental and property price trends, demographic shifts, and economic indicators, investors can adapt their strategies to align with evolving market conditions. Flexibility and proactive adjustments, such as refining acquisition criteria, pricing strategies, or diversification plans, ensure that investments remain resilient and competitive in dynamic markets.